What's up guys, it's Trav here and welcome back to my channel. Before we start the video today, I would like to say thank you so much for all your support and your help. I just cannot believe that within the last 30 days only, my channel reached almost 500 subscribers already. That was insane guys, and I do really appreciate all your support and your help. Why don't we just work on the same goal of 1,000 subscribers in the next 30 days, right? Why don't we just work on that? And if we reach the 1,000 subscribers, I will create a giveaway event and all of the subscribers to my channel will have the same opportunity to win the event. So why don't we just work on that and we will check back 30 days from now. And guys, just a quick note for you before we start the video today. Real estate investment is just a one way of investment in Canada. You can think about other types of investment as well. So although 80% of my investment portfolio is put on the real estate investment, the other 20% I also put it on the stock market. So if you don't have enough down payment for the property yet, you can think about investing in stock market right away, because investment is the only way that you can help you build the wealth, build the cash flow, as well as building the down payment for the property. And with that being said, Questrade has always been my favorite brokerage in Canada. I have been using Questrade since I started investing in stocks and ETFs. So if you decide to start your investment journey right away, please feel free to check out the link below. If you sign up a new Questrade account using the link below, you will be able to qualify for the $50 cashback on the commission. And it means that you may qualify for up to 10 trades with Questrade without any commission, and I believe that is a really good start for any new stocks or ETF investor. Okay, getting back into today's video, if you are at the final step of buying a property, you will have to make a very important decision on which type of mortgage that you want to go with. Will it be a fixed rate mortgage or will it be a variable rate mortgage? And in this video, I'm going to show you what are the main differences between them, and as well I will show you how I choose my mortgages and the reason why I decide to choose that option over the other option. And right before we do that, please do me a favor as always, please hit the subscribe button and the like button below, because it will help my channel a lot and it will keep me being motivated to make new videos for you guys. And if you have done that already, I really do appreciate that. And let's get into the video right away. Let's talk about the fixed rate mortgage first. So as the name you can see, and it tells you right away, for a fixed rate mortgage, if you decide to go on with that option, it means that your rate and your monthly mortgage payments will stay the same over the term of the contract that you decided to sign for. For example, if you talk to the bank and they decide to offer you the rate of 2.2% 5-year fixed rate for the mortgage and you decide to take it, it means that that rate of 2.2% will stay for the next 5-year period, and it will not change. Even though the prime rate and other kind of rates from the lenders change, it will stay the same, and it means that your monthly mortgage payments will stay the same every month for the next 5 years. So how about the variable rate mortgage? As the name tells you the way it works, the variable rate mortgage, it varies, right? It means that whenever the bank gives you the option of a variable rate mortgage, it means the rate that you choose can change, okay? It changes in which way? So whenever the bank gives you the option of the variable rate mortgage, it will be in the form of the lender's prime rate minus a discount, and then it will be your rate. So in this case, the discount portion will not change at all, but the lender's prime rate may change, and it all depends on the Bank of Canada prime rate. For example, if you talk to a bank and they decide to give you the option of the 5-year variable rate with the rate of prime minus 0.9%, and you decide to go on with that rate, it means that your rate within the next 5 years will be the rate of prime minus 0.9. And because it is a variable rate, it will not be a fixed, right? So it may change, but it all depends on the lender's prime rate. So in this case, the discount of 0.9%, it will stay the same no matter what. but the thing may change is the prime lending rate. Just a quick note here for you guys regarding the variable rate. Some lenders, they will just keep the monthly payment the same although the variable rate change. For example, TD Bank, they will still keep the payment amount the same although the rate change. So even if the rate go up or the rate go down, the monthly payment amount will stay the same. The only thing that change within that payment amount is if the rate goes up, it means that a bigger portion of the monthly payments will go toward the interest and the smaller amount will go toward the principal. While the other banks, they will change the payment amount if the variable rate change. So for example, the RBC, they will change the payment amount. If the rate goes up, your payment, the monthly payments for the mortgage will go up as well. And on the other hand, if the rate goes down, your monthly payment amount will go down as well. There are two facts that I want to mention over here. The very first fact is that the variable rate tend to be slightly lower than the fixed rate at any given time, but that's not always been the case. You can see in the chart below, in late 2019 as well as once in 2007, the variable rate is a little bit higher compared to the fixed rate. The reason behind this one is whenever the bank decides to give you the fixed rate mortgage for the next 5 years, for example, they will bear a much higher risk because within the next 5 years, they cannot tell if the interest rate will stay the same or the interest rate will go up much higher. So in the case that the interest rate goes up much higher, they will lose a lot of money because they gave you the fixed rate for the 5 years and they will never change that rate within the term, right? So they may lose some money. So with that being said, they will have to take into consideration the opportunity cost as well as the risk. So it means that they will have to set the rates a little bit higher to make sure that they can recoup some of their money by lending you the fixed rates for the next 5 years. The second fun fact is that 66% of the total mortgages in Canada, they are fixed rate mortgages. Only 29% of those are the variable rates and 4% of that is the combination of both of them. So you can see that most of Canadians, they tend to choose the fixed rate over the variable rate mortgage. Okay, so now let's talk about the pros and the cons of each option. Let's talk about the fixed rate mortgage first. So the very first advantage of the fixed rate mortgage, or the pro number one that I can think of right away, is the peace of mind. So if you choose the fixed rate mortgage, you sign the contract for 5 years, it means that you can have the peace of mind for the next 5 years and you don't have to worry anything about the fluctuating interest rates or if the economy is doing good or bad. That doesn't matter at all because the rates will stay the same for the next 5 years and you know exactly what is your monthly payment amount, and that for sure can bring you with a peace of mind. The second pro that I can think of right away is because you know exactly how much is your monthly mortgage payment for the next 5 years, you can easily budget things, right? So you know exactly how much you pay toward the mortgage every month. So with your income that you know exactly how much is it as well, you can budget things and then you can for sure set aside a number for your savings and you can start save the money, do the investment again, and then for sure you can build your wealth your way. Talking about the con number one of the fixed rate mortgage is that the rate for the fixed rate mortgage tend to be higher than the variable rate mortgage, as I mentioned earlier. So because the bank will bear a little bit higher risk when they lend you the fixed rate mortgage, it means that the rate will be a little bit higher and it means that your monthly mortgage payments, although it is a fixed amount and you can know it, but it will be a little bit higher if you choose the fixed rate mortgage over the variable rate mortgage. And the con number two is the biggest con of this kind of mortgage that I can think of. Because if you choose the fixed rate mortgage and you want to refinance anytime in the close future, you have to break the contract, and whenever you break the contract, you have to pay a penalty to the bank, right? So for the fixed rate mortgage, if you want to break the contract, the penalty by breaking the contract is the is the higher or is the bigger of the two of these. The first one is the interest rate differential, or the second thing is the 3 months of interest. But most of the cases, the penalty for the fixed rate mortgage will be the interest rate differential. For example, if you decide to choose the 5-year fixed rate mortgage today with the rate of 2.2%, and 1 year down the road, which is 1 year from now, you want to refinance the mortgage, so you want to break the contract and create a new contract. So you still have 4 years left on the term. So the way the banks will do it is they will take the boosted rate 1 year from now when you want to break the contract. For example, let's say the rate on that day will be 3.2%. So they will get that 3.2% minus the rate you got today, which is 2.2%. So the difference will be 1%. So they will use that 1% difference multiplied by the balance left on the mortgage and then multiply by the remaining term, which is 4 years. So I will show you in the detail in the calculation right below, so just stay tuned for that. Now let's talk about the variable rate mortgage. The very first pro that I can think of right away when talking about the variable rate mortgage is the variable rate mortgage tend to be a little bit lower than the fixed rate mortgage when you sign the contract. It means that your monthly mortgage payments when you sign the contract is lower. I will also do a very detailed breakdown on the difference between the fixed rate mortgage that the banks offer today and the variable rate mortgage that the banks offer today. I will make a comparison between those two to let you guys see what is the difference between the monthly mortgage payments if I decide to go with the variable rate mortgage instead of the fixed rate mortgage. So stay tuned for that as well. The pro number 2 of the variable rate mortgage is that you can always have the opportunity to lock the variable rate mortgage into the fixed rate mortgage without any penalty. But just make sure that you always bear in mind that if you want to lock the variable rate mortgage into the fixed rate mortgage, it must be the term of 3 years fixed rate or more. That is the condition that most of the banks and the lenders here in Canada require you to do it without any penalty. And the pro number 3 on the variable rate mortgage, which is the pro that I like the most, is if you choose the variable rate mortgage over the fixed rate mortgage, the penalty when you break the contract to do the refinance again will always be the 3 months of interest only. Talking about the cons of the variable rate mortgage, the very first con that I can think about right away is because the variable rate, it means that the rate fluctuates a lot. So you will have to spend a lot of time, keep tracking of the economic growth, how bad it is doing, because that is the way that the banks or the lenders decide to increase or decrease their lending prime rate. So you have to spend a lot of time keep tracking of those. And if you find any signal that the rates will increase or the decrease, you will have to make adjustments accordingly. And the second con of the variable rate mortgage is that because the rates change, most of the banks and the lenders here in Canada, they will change the payment or the monthly mortgage payment accordingly as well. Except for TD Bank, they will just keep the payment the same. The only thing changed will be the amount of money going to the principal and the amount of money going to the interest will change when the rates change. So with that being said, because the monthly payments change, it will be a little bit harder for you guys to keep budgeting your cost and your income and how much to spend, right? Because you cannot predict exactly how much you will pay toward the mortgage, so it will be a little bit tougher. Okay, so now let's jump onto my screen to see what is the difference between the penalty of breaking the contract on the fixed rate mortgage and the variable rate mortgage, to see the difference between the interest rate differential and the 3 months of interest. Let's jump into it. Okay, so on the other day, I used the Scotiabank mortgage calculator online. Today's day, I'm going to use the tools from TD, which is totally free for you guys to use as well. So you can easily access by typing the TD mortgage calculators here into Google, and you move down here and you can click on this link. As you can see, there's a lot of tools for you to use, and I'm going to show you the difference in the penalty when you break the contract between the variable rate mortgage and the fixed rate mortgage. So you can use this one, mortgage prepayment calculator. Okay. It will send you to this website. You can hit on the calculate the payment. You want to prepay the remaining balance. For example, if you got a mortgage and you got a fixed rate first, okay? Okay, so for example, you got the rate of 2.2% for the 5-year fixed rate. The outstanding balance is $500,000. You got a 5-year mortgage. And for example, you took the 5-year fixed rate mortgage 1 year ago, so you still have 4 years left on the term. So it means that we will take 2021, 2, 3, 4, 5. So June 2025, for example, the 2nd of June 2025 will be the maturity day. The rate discount, just for example, we got the rate discount to be 3.39. Just right down here. So if you decided to get the 5-year fixed rate mortgage a year ago, you still have 4 years on the term. You got the rate of 2.2%. And if you want to break the contract today, so it means that you still have 4 years on the term, and the payment penalty will be $36,630 roughly at this amount. So this is the way TD Bank is calculating the mortgage prepayment penalty. They will get the boosted rate for the day that you wanna break the contract, which is today's date. And they will calculate based on the rate you got 1 year ago, which is, I assume that it was 2.2%. The difference is 1.85. Then multiply by the balance of $500,000. And then multiply it by the remaining term, which is almost 4 years left. So the estimated result is $36,000. This is the prepayment penalty if you decide to choose the 5-year fixed rate mortgage and you want to break the contract when the remaining term is 4 years left and the balance is $500,000. Okay, all right, let's do it again. Let's do it again with the variable rate mortgage instead of the fixed. So I will still want to pay everything, and this time I would choose the variable rate. The percentage, for example, we will get the rate of, if we have the same rate of 2.2%, just like the fixed rate mortgage. The remaining balance is still the same, 500,000. You see, the prepayment penalty will still be much lower, only $2,750 only. So the way they calculated this one is the 3 months of interest. Right? It is the 90 days of the interest. So it should be only $2,750 compared to $36,000. That is the reason why I really prefer the variable rate mortgage over the fixed rate mortgage. Now let's talk about my personal opinions on these two types of mortgage. So if you subscribed to my channel and you watched the previous videos that I published, you can see that on all of my mortgages, I decided to go on with the variable rate mortgage instead of the fixed rate mortgage. There's a couple of reasons behind that one. The very first reason that I decided to choose the variable rate mortgage, it was because the variable rate mortgage has always been lower than the fixed rate mortgage anytime given that I decided to sign the contract. So let's jump onto my screen right now to see what is the difference between the rates that the banks offered and why that does mean too much for me to choose the variable rate mortgage instead of the fixed rate mortgage. So get back onto the mortgage calculator from TD. We can calculate it right now over here. It will lead you to this website. So for example, you got the principal amount of $500,000. And let's see if you choose the 5-year fixed rate and they are offering the rates of 2.44. We go with the 25 years then. Just take it as an example. You just hit no on the lump sum payments. You don't want any insurance, for example, so you calculate the payments. So with the mortgage amount of $500,000 with the rates of 2.44, 5-year fixed, 25 years amortization, your monthly payments will be $2,224.92. Let's compare to the variable rate today. So right down here, the 5-year close variable rate mortgage 1.55. Everything stays the same. 25 years amortization mortgage $500,000. So you will see the payment amount will be only $2,010.27. So those are the differences between the variable rate mortgage and the fixed rate mortgage. If you decide to go on with the variable rate mortgage today, with this kind of rate that TD is offering, the monthly payment amount will be around $200 less than the fixed rate mortgage. That is the reason why I want to move on with a variable rate mortgage, because it will bring your monthly payments down a little bit, and it will help you with the cash flow for sure. The second reason that I decided to move on with the variable rate mortgage instead of the fixed rate mortgage was that because I'm a real estate investor and I know that no sooner no later I will do the refinance over the time. So by having that in mind, I understand that I have to use the variable rate mortgage because it will provide me with the opportunity to do the refinance, to break the contract with a much lower penalty, and it will help me save a lot of money. The third reason that I decided to move on with the variable rate mortgage is that the Bank of Canada, they just released the news back in April 2021 that they intend to keep the overnight rate low and they will not change it until maybe late 2022. So I know and I understand that my variable rate will stay low at that amount of rate until maybe late 2022. So from now up to that time, I will still be able to save some money using the variable rate instead of the fixed rate. And even in the case that in late 2022, Bank of Canada, they decide to increase the rate, I will still have the opportunity to lock the variable rate into the fixed rate mortgage. So it is a win-win for me. So to sum up, each types of mortgages, they will have their own pros and cons, and it all depends on your financial circumstances as well as your goals and intention in the future, so you can choose the appropriate mortgage type for your mortgage. So if you think that you want a peace of mind, you don't want to think anything about the fluctuating interest rate, you can for sure go on with the fixed rate mortgage, like the 66% of all of the mortgages in Canada they decided to choose. And on the other hand, if you want to gamble a little bit, you want to see if the rate goes down, you can take advantage of that. Or in case that you want to refinance in the future, you want to avoid the high penalty, you can for sure go on with the variable rate. So that is the end of the video today. If you think the video is useful and helpful, please do me a favor, just hit the like button and the subscribe button below, because that will keep me being motivated to make new videos for you guys. And again, if you have any questions, just please feel free to drop the comment below. I will answer all the questions right away. And again, thank you so much for all your help and support, and thank you for watching my video today, and hope to see you in the next video.